A big, beautiful tax bill. Hi, my name is Matt Barker with Clarity Wealth, and welcome to this week's Friday Fireside Chat. As some of you may already know, Washington just unveiled a new tax bill. The name sounds like a marketing campaign rather than policy document. One Big, Beautiful Bill Act is the name of it. Certainly some of you are already aware that at the end of 2025, the current tax code is set to expire. Whether or not you love the title, the bill itself could have a real impact on your bottom line. From your paycheck and deductions to your retirement savings strategy and your long-term planning, it's important that we get to dig in. I'm going to share with you a few highlights that I think might be important. First of all, on the individual side, permanent extension of the 2017 tax cuts. The bill seeks to make the individual tax rate reductions from the Tax Cut and Jobs Acts permanent, preventing them from ending in 2025 as they're set to do. Secondly, the elimination of taxes on tips and overtime pay. Income earned from tips and overtime would be exempt from federal income taxes, aiming to increase take-home pay for service and hourly workers. Next, increasing the standard deduction and the child tax credit. The standard deduction would be raised and the child tax credit expanded, providing additional relief for families. And lastly, on the individual side, the state and local tax deduction, also known as SALT. Currently, it's at $10,000. The bill is proposed to increase that deduction to $30,000, capping it there. However, this provision specifically does have a lot of resistance, as most lawmakers think it will have significant impacts to the federal budget. Next, let's focus on business for a minute. Enhanced Qualified Business Income Deduction, also known as QBI. In Section 199A, the deduction for qualified business income will be made permanent, an increase from currently 20% to 23%, benefiting pass-through entities like S-corps and partnerships. Restoration of business tax breaks. The bill aims to restore several business tax benefits from the Tax Cut and Jobs Act, including immediate deductions for domestic research and development costs and full expensing of capital investments. And lastly, the repeal of clean energy tax credits. The tax incentives related to electric vehicles, home energy efficiency, renewable energy production would be repealed or rolled back, potentially impacting that sector very significantly. Now, it's only May, and this bill will probably change 100 times before it actually gets passed. But I wanted to share with you today some of the highlights, and more importantly, I wanted you to know that now is a good time to start thinking about how it may impact you or those you care about. If there's anything we can ever do to help or any questions we can answer, feel free to reach out. Make it a great day.